Hi, I'm Janine Firpo, and I want to welcome you to this, our fourth Fireside Chat in a series of 12 that will be coming out prior to the publication of my book, Activate Your Money, Invest to Grow Your Wealth and Build a Better World. Today, we're going to be talking about chapters 4 and 5, which address your cash, your savings and checking accounts, and other cash that you may hold. And I'm delighted to have today two guests from very interesting financial institutions here in the San Francisco Bay Area. My first guest is Lynn Marie Auzenne, who is the Chief Marketing Officer at Beneficial State Bank. And my second guest is Rafael Morales, who is a Senior Manager at the Self-Help Federal Credit Union. These are two very different institutions that are providing financial return and also doing good in the world. And they're here with me not only because they were contributors to the book, but also because as I was writing this chapter, I went through the process of moving my own money out of a larger financial institution into some local financial institutions. And I am now happy to say I'm a client at both Beneficial State Bank as well as the Self-Help Federal Credit Union. So we'll go into all of this a bit more and explain to you what these institutions are, how they work, and what kinds of options you have to put your money to work in new and interesting ways. So welcome to both of you. Thank you so much for being here with me.
Thanks for having us.
Thanks, Janine.
Yeah, and thanks for being my bankers. I love it. So what I'd love to talk about a little bit first is how your institutions came to be and what really makes them different than the way we think of most banks or most financial institutions. And Rafael, I'd like to start with you. If you could talk a little bit about your institution, because we actually tell part of the origin story in the book for Self-Help Federal Credit Union.
Sure, thanks, Janine. So Self-Help was founded in 1980 in Durham, North Carolina, originally to encourage and support worker-owned cooperatives and businesses. But we quickly realized that access to capital was a really critical need in the working class communities that we were focused on. So we decided to start a financial institution by launching Self-Help Credit Union in 1984. And this was done with an initial $77 donation from the proceeds of a bake sale at a local bakery in Durham, North Carolina. And as we engaged our communities and assessed their needs, we decided to shift our focus towards home lending to support primarily African-American single mothers in accessing home ownership, which we know is one of the proven best ways to create a path to long-term financial stability and intergenerational wealth building. Since our founding, Self-Help has really stayed true to its mission to create and protect ownership and economic opportunity for all, but especially for people of color, women, rural residents, and low-wealth families and communities. And we do this through access to responsible financial services, lending to small businesses and nonprofits, as well as developing real estate and promoting fair financial practices. And while our work benefits communities of all kinds, and we serve members across the economic spectrum, our focus really is on those who may be underserved by conventional lenders, and particularly people of color, women, rural residents, and low-wealth families and communities more broadly.
I think that it's really fascinating that your organization started from $77 and really very basic beginnings, and it's now a $4.5 billion financial institution. So I think it's fantastic. And the focus on community, underserved populations, et cetera, is part of what makes Self-Help really unique. I think the origin story for Beneficial State Bank is quite different. I'd love to hear from you, Lynn Marie, a little bit about the background of your institution.
Sure. Thanks, Janine. Yes, you're correct. It's funny because we do have so much in common with Self-Help and what we're trying to do and how we're trying to do it. It's just our origins are very different in our structure because we are a regular for-profit FDIC insured bank. There are a lot of differences there, but I'm so happy that we're coming at the same problems from completely different directions. And I think that increases the probability that together we can solve them. So a little bit about our origins. So just prior to the Great Recession, because I know we all have such great timing, our founders, Kat Taylor and Tom Steyer, agreed that the banking system was overdue for a disruptive transformation. Banks had become these large, powerful lobbying bodies very concentrated wealth there, trillions of dollars in just a few institutions. And you can imagine, how that sort of imbalance of power can affect the entire financial services industry. Over the last 30 years, we've lost over half of our community banks to acquisition and consolidation and liquidation. And now fewer than 15% of banks control nearly 90% of the assets. Kat and Tom thought banks could and should do better. Unlike credit unions, banks are for profit. They have a single bottom line for the most part, and that is maximize profits for their investors and their shareholders. So our founders thought, the first thing we really need to fix is this sort of misalignment of priorities. How can you be benevolent? How can you serve your communities when you have one bottom line and that's profitability? So they said, let's structure a bank completely differently. Let's fix this inherent conflict of interest that prevents banks from being truly community focused and benevolent. So they adopted, instead of a single bottom line, a triple bottom line of people, planet, and prosperity for all. So with that, making a profit can never exceed our goal to invest in our communities or our commitment to sustainability and regenerative endeavors. But to make sure all of this was enduring, we needed a special charter. So they decided to donate all of their equity capital to a foundation, a nonprofit entity, Beneficial State Foundation. And their charter requires them to always serve in the best interest of their community and the best interests of our planet. So now we have this new ownership structure where we're a for-profit bank, but we're owned by a nonprofit that serves the community. So it's this very elaborate structure that ensures that the best interests of the people who put money into our bank are served with every decision and every action and every loan that we make.
Both of you are really so focused on your communities, on making a difference in your communities. I mentioned earlier that you're both in Oakland. People may assume that you're very unique. And I think what's really gratifying to know is that there are literally thousands of local, community-based, either community development financial institutions or credit unions that people can choose to bank with that are going to get much closer to their value. So deposits there, and this is a very important point, are guaranteed by the federal government up to $250,000, just like they would be in any bank. So I know that one of the concerns that people have had and things that I have heard in the past about banking in a small institution like one of yours is that they could lose money. And so I'd love for you to address that. How do you speak to people who are concerned that their deposits may not be as safe in your financial institution as they are in a big bank?
I don't blame people for being concerned. Though no one's lost their money in an FDIC insured institution since the 30s, especially during COVID, there have been a lot of fear-based scams going on out there. People contacting, reaching out to people, claiming to be a representative of the FDIC, warning them that their bank is in danger of failing, trying to get them to give up account information. So it's not just this fear, it's the fear-based scams that are going on right now in this very tenuous, uncertain time that people need to be cognizant of.
But Rafael, you also had some thoughts about this when we spoke earlier. And one of the things you mentioned to me is the insanely high repayment rates that a financial institution like yours has, and actually how sometimes these smaller institutions actually have better repayment rates from loans and possibly even better financial stability in some ways. So if you could speak to that, that would be very helpful.
Yeah, I mean, the reality is that many of the folks that we serve as a credit union and as a CDFI are low, moderate income families that have very little recourse for mainstream financial products and services. So they know that we are the only folks in many cases that are willing to take a risk on them, willing to support them to buy a new home, to grow their business, or whatever other need that they have. And so they will make sure that they pay that loan. Of course, these folks are financially vulnerable, and life happens. And obviously, right now we're in the midst of a really difficult time. And so our members do from time to time miss payments. Their loans become delinquent, but we really try to go above and beyond to work with them to figure out work plans to get them back on track and make sure that they don't default on that loan so that they can continue to build credit and achieve their dreams.
Great. And I also know that even in cases where some of these smaller financial institutions have gone out of business, their customers' money was safe and secure. So even in instances like that, and I think that that's what is really important for people to understand, is that your money is safe and secure. And not only that, but as we've heard, it's doing great things for the community. It's doing great things for underserved people. These kinds of financial institutions are there specifically because they're filling a gap that the large banks don't serve. I just actually got an email today, Rafael, from your financial institution telling me about what you guys are doing with the new PPP money, which is great. And it speaks to one of the things that I love about banking with both of you, which is that I hear about the great things that you're doing. You inform me of that. And what's more, the customer service I get from belonging to a small bank is phenomenal. So I well remember not happily sitting on an 800 number for 15 to 20 minutes at a time or more, waiting for some anonymous person at my financial institution to finally answer the phone and attempt to help me solve a problem, which they often didn't do very well. And it's been such a joy, I can't tell you, to be able to just call up one or the other of your financial institutions and talk to a real person and get some help very quickly if I have a problem or an issue or need something. So that's been a wonderful aspect of banking with your kinds of banks. The other concern I hear about sometimes from people is, well, small banks don't have the same technology. The technology just isn't as good, and it's much harder to bank with them, and I can't find ATMs. That has not been my personal experience, but I'd appreciate it if you could speak to that as well. So, Rafael, where are you guys in terms of your technology? And if I work with Self-Help Federal Credit Union as a customer, can I do all of my banking by phone, or do I have to come into your branch office?
Yeah, so we acknowledge that our technology may not be as expansive or as sophisticated as some of those offered by our competition, particularly at the large for-profit banks. As was mentioned, these are trillion-dollar institutions that can really throw a lot of money at their services and their tools. But we do offer all the modern functionalities that consumers have come to expect. So these include remote account opening. We actually have a virtual branch team that can support folks with that. Online and mobile access to credit union accounts. These include mobile deposit, bill pay, loan and credit card applications, as well as the ability to transfer funds between self-help accounts and external linked bank and credit union accounts. In terms of ATM access, we offer ATMs at all 72 branch locations across the nation. And we're also part of the co-op network, which provides members with an additional access points at 30,000 surcharge-free ATMs in all 50 states, as well as 10 countries.
That's great. And Lynn Marie, what about Beneficial State Bank?
We're very much on the same page with Rafael and self-help, that we are pushing the digital divide. And I think COVID has accelerated our investment in digitization. But I will say it is true, there is a difference. Having spent the last 25 years in larger financial institutions, there's definitely a difference in the funds that are available to invest in whatever the latest technology is. Saying that, I will say, having been a part of building out those capabilities for larger banks, that one of the things I've noticed is that in the larger institutions, their infrastructure is so huge and elaborate, and they invest so much in a singular platform and the integration with all the other platforms for every single product, that once those platforms become obsolete, it's very labor intensive and prohibitively expensive and even risky to just go and adopt whatever the latest, greatest thing is. So small banks have their own challenges in investing in the latest technology, but large banks also have a challenge. So just because you're with a big bank doesn't mean you have the latest. That said, for us, there's this big the trend happening with fintech innovation, and that is going to be a boon for community banks and smaller credit unions, because we're moving from these singular multi-million-dollar investments that banks have to make in order to offer our clients the latest and greatest digital capabilities to what they call a highly competitive best of breed infrastructure, where small fintech organizations compete against each other for plug-and-play solutions for things like an online application or video banking or mobile remote deposit capture. So businesses and individuals can just use your mobile phone and make all your deposits without leaving the comfort and safety of your home office. So all of those solutions are becoming singular purchases and integrations that banks can make, and these small institutions are competing with each other to see who has the best solution for the most economical price. And it's allowing smaller banks to compete with much larger banks across these technologies and services. So at the end of the day, it's not the technology that will differentiate. It's, to your point, Janine, like, who's going to answer the phone when things go wrong? Who's going to help you when you need something special? Do you have a banker, or do you just have a bank?
I actually think that as long as our bank is performing the basic things that we need, that's covers the vast majority of us. I think that there are people who maybe have businesses that are doing a lot of overseas travel through their business and have to have bank accounts in various parts of the world, or more sophisticated banking needs that may find it a little harder to have all their cash in an institution like yours. But for them, I would suggest that one thing to consider is putting some of your capital into a financial institution like this, particularly if you have more cash than you need for your immediate day-to-day or month-to-month needs. You can put some of it into these kinds of institutions. And there are, as I said earlier, literally thousands of these kinds of institutions all over. In order to help you find them and to make better decisions, we've actually offered some tools in the book and on the website that you can use. One of the great tools is a website called Mighty Deposits. So we've talked a lot about supportive community, but through these kinds of tools, you can find financial institutions that are directly supporting Native Americans, or that are directing smallholder farmers, or that are doing things around climate change and climate action. So the financial institution that you choose, you can actually find different types of impact that that institution could be having to make your choice. And I know, Lynn Marie, that this is something that is particularly important to Beneficial State Bank. And I'm wondering if you could speak a little bit about what Beneficial State Bank is doing here.
That's a good point, Janine. And as I brought up earlier, it's hard for consumers not just to find these institutions, but to sift through the mis and disinformation that might be out there. Because if for people who've heard the term greenwashing, marketers know that, especially with Gen Y and Gen Z, making values or purpose-aligned consumer decisions is the big trend now. So all the banks and financial institutions are jumping on that bandwagon. So we're going to rely pretty heavily on these data aggregators like Mighty Deposits, or even the Rainforest Action Network, or the Global Alliance for Banking on Values, to be that point of reckoning, that reliable source of benchmarking and transparency and information. You can't just go to a bank's website and see what they say about themselves. You need to go to those third-party aggregators. And rejoining the Paris Climate Accord has been great for us. We are one of 38 founding signatories for the UN's collective commitment to climate action. And we recently moved our Seattle branch to the Bullitt Center. And the Bullitt Center in Seattle is was created by the Bullitt Foundation. The head of the Bullitt Foundation is actually the person who started Earth Day 51 years ago. It is considered the greenest commercial building in the world, depending on what your measuring stick is. It's actually carbon negative. They produce more energy than they consume in this building, and it's technologically advanced and an amazing example of what all commercial buildings could and should be. And it's a little more expensive to be there, but it's aligned with our values and our commitment, because I think we're at a point right now where being sustainable is no longer adequate. And we need to be regenerative and restorative. We need to start turning back the clock.
This is another thing that I love banking with both of your institutions is it actually makes me feel like I'm part of something bigger than myself. I actually got a packet of coffee from Self-Help in the mail one day because they were letting me know that the fact that I was keeping my deposit accounts with them was enabling them to make loans to this particular woman who was a local Latina coffee maker, coffee grinder, and this was some of her coffee. And so they offered it to me. And that is something very special that you would not get, I don't think, from a larger institution. It really, really makes me feel a part of my bank. And I'm sure that you both have stories of people who you have helped through your financial institution, clients of yours that you've been able to help, possibly like the woman I just mentioned, possibly different. But I'd love to hear those stories if you have them. Rafael, do you have anything that you could add to the story that I mentioned already?
Yeah, absolutely. So I have a story about Frances, and she's a single mother of 6 children who's dedicated her life to providing for her family. And while most of her children have moved on to raise families of their own, Frances is on call 24/7 to take care of one of her sons who has a developmental disability. So as you might imagine, transportation is crucial as she manages her son's care as well as a full-time job. But she had a car that was old and unreliable, unable to afford, expensive repairs, and with a credit score that only qualified her for very high interest rates. She was in a constant state of worry. Would her car start when she headed to work? Would she get stranded on the road in the middle of the night while taking her son to the hospital? These are the things that working families deal with on a regular basis. And all of that changed when Frances connected with Peninsula Family Service, a Bay Area nonprofit. Through our partnership with Peninsula Family Service, our San Jose branch was able to offer a Drive Forward loan. So the Drive Forward is Peninsula Family Services program, which provides affordable loans to help participants purchase a reliable used vehicle and repair credit at the same time. So we were able to fund a $12,000 auto loan for Frances through Peninsula Family Service. It provided her with a quality used car, and more importantly, it's given her peace of mind. And so, that's just one example of how something as simple as a loan can be really life-changing for folks that are struggling to get by and just dealing with life.
Yeah. Thank you. That's a great story. Lynn Marie, did you have anything you might want to add to that from your experience?
Sure. Yeah. Well, to your point, it's really important for us to bring services to our clients. And one of our biggest segment of clients are actually nonprofits. So we're not the heroes, but the people that we finance and give loans to are. And they do great things in our communities, and we try our best to support them. And one of the nonprofit organizations that we financed and have been supporting is called the University District Food Bank. So they help homebound seniors and others fight food insecurity. And right now, this is really important because food banks around the country are seeing a flood of new customers and new need right now due to the pandemic. So in addition to being an ongoing client, we were able to help University District Food Bank with a paycheck protection loan recently. This helped them retain 10 of their staff members and even bring on additional help. It helped them with their volunteer program, and it helped them pivot from a come to us model to a will come to you model so they could continue to serve their communities. And they've been a pillar of the Seattle community for decades in the University District. They have literally tens of thousands of people who rely on them, who would go without a meal for days if it weren't for University District Food Bank delivering these bags of groceries to them on a regular basis.
So what I'm hearing is that when we choose to become depositors at financial institutions like yours, our money is being used both at the local community level to help single individuals like Francis, and it is also being used at the larger community level to support institutions and services that are critical to the welfare of the people that live around us. So there's actually a lot of ways in which our money can be used. You know, I think a lot of people don't think, oh, I'm not an investor. I don't invest. And yet they are, because first of all, their cash and savings account are an investment, right? When we give our money to someone else, like a financial institution or a bank, that entity is going to use our money in some way. And the question is, how are they using it? And most of the time, we haven't a clue. And when we do see something about how the big banks are using it, it's not always ways that make us feel good about how the money is being implemented. I also think that we have to think about, is our money being used to help support the financial economy, which is all about making and growing money, or is our money being used to support the real economy, which is actually supporting people and goods and services and products in our own communities? So I think it's a really important question. And I think that your institutions are both the kinds of institutions, and there are many, many more, as we spoke about, that can offer the people this alternative. One of the reasons, as I mentioned early on, that I opened accounts at both of your institutions during the writing of this chapter is because I actually wanted to see for myself how hard it was. And so not only did I open accounts with both of you, I opened accounts with 2 other banks as well. So I opened 4 accounts at 4 different banks. And one of them was with Aspiration Bank, which is a values bank, 100% online. And here's the thing I want to get across. It was not that hard. So opening the accounts was insanely easy. I did it online. I didn't have to go to the bank branch. It was really easy to do. And then the process of putting assets in the bank, new bank accounts, and moving all of my bill pay and everything was not that tough. And it took a little time. I did it slowly over time, but it wasn't horrible. And in the book, we actually give a step-by-step guide to the steps that you would take to make this kind of move. We tell you exactly what you need to do. And we also have a number of tools that are going to be on our companion website that you can download to make this even easier. So we point you to resources where you can find these great kinds of financial institutions. We tell you exactly what you need to do to move your money to them. And we also provide you tools to make that process much easier. So I welcome all of the listeners to think about doing this, because it really is awesome on the other side. I got to tell you, I so much prefer the relationships with both of these institutions to the relationships that I had before. And I want to just thank Lynn Marie and Rafael so much for being part of this session today and talking about banking, and wanted to ask if you had any last thoughts before we wrap up.
So we know that many consumers are exploring ways that they can put their dollars to work to benefit communities in need while also earning a return. And we're really proud that we can confidently say that putting your money with self-help, whether as your primary transactional account or as a mission-aligned investment option, allows those dollars to make a positive impact in the low to moderate income communities that we're focused on. And that's with zero risk as a depositor, and extremely low risk for impact investors exploring PRI opportunities. As we noted earlier, all credit unions are insured by the National Credit Union Administration up to $250,000 per member. We actually have two credit unions, so we can actually extend the federal insurance up to $500,000 per individual, with which for higher net worth members is a huge benefit to help us bring in that capital, which then allows us to relend and make greater impact in the communities. And those investments really are how we grow our work, how we grow our impact, and help the members that we serve. So, we hope that folks listening today will consider joining us in support of this mission. Whether you're a CDFI or a credit union looking to reach deeper into low income and working class communities, we're also available to share our experiences and to share our learnings. And really, we want to support the field, and we want to support our communities because there's plenty of need out there for everyone.
And actually, you brought up another point that I had wanted to mention, which is you talked about the fact that because you have two different CDFIs, you can actually insure people's money up to $500,000 because 250 of it would go into one CDFI and 250 would go into another CDFI. There are certain rules around these $250,000 maximum. There are ways in which you can secure more of your assets. One of those is something called CDARS, which I didn't even know existed until I started researching this chapter. And Lynn Marie, I know that Beneficial State Bank offers CDARS. So could you explain what that is and how it works?
Sure. If you don't mind, I would love to answer both of your questions.
Please do.
So CDARS are certificates of deposit account registry service. So you've heard of a CD. So to get around that whole constraint of $250,000, and by the way, it's per depositor per account. So if you have a joint account or 3 people sharing an account, it's per person. So your account, if you share it with a significant other, is actually insured by the FDIC up to $500,000 per institution. So what these CDARS do is they allow you to deposit actually tens of millions of dollars in a single institution. And that institution then takes that money and leverages this network of FDIC insured institutions to sort of reciprocate those deposits automatically through a central system. So if you do happen to have $50 million lying around and you're thinking, oh my gosh, I have to invest this money in 200 different institutions to make sure it's insured, you can just find one bank that offers the CDAR network, and then they will do that sort of disposition for you, that investment of your money in multiple areas, so that your money is insured, all of it is insured. Right. And then when you said, is there something that you want people to know? One thing I encounter that's inertia for a lot of people moving their money to impact banks is that they think, well, I don't have a lot of money, or I'm just one person. They don't really see how they have that agency or their power, how their consumer decision makes a difference. But they vote every day. We vote every day with every decision we make, every purchase we make, every institution that we bank with. And because of leverage, where we bank is very, very important. If we leave our money in a large organization that is funding environmental degradation and climate change, then we are part of the problem. We are making that possible. And each one of us that takes a step, even if it's inconvenient and labor intensive, to move our money to values aligned organizations, we are fulfilling what Angela Glover Blackwell from Policy Link calls the curb cut effect, if you've ever heard of this. So years ago, the Americans with Disabilities Act, one of the things they wanted to do was make the streets safer for people in wheelchairs or older people in walkers. And it was this big fight. Oh, it's going to cost hundreds of millions of dollars to change all of our curbs and our sidewalks. So there's that little lip that allows you to step off the sidewalk and onto the street without having to step off a ledge. And finally, it went through and it became law, and they instituted this everywhere. And then what they discovered was were all these additional unseen benefits. It didn't just benefit those with the greatest need, it benefited the entire community. So women pushing babies in strollers, somebody who broke their leg and they're on crutches. It increased the probability that people will cross a street at a corner instead of jaywalking. So people who died in car accidents crossing the streets dropped dramatically. And again, she calls it that curb cut effect. And the idea is that when you solve a problem for those of us with the greatest need, with specificity and nuance for the most vulnerable among us, you actually lift up everyone. You lift up the entire community.
That is such a great point. And I think we often think that our money doesn't really matter that much. And you're absolutely right that even moving small amounts do. And the more of us do that, our collective power is astonishing. And our collective power, particularly as women who have done amazing things. So when we start to do things together as well, our little bits and pieces add up to a pretty mighty wave. So I really appreciate that. I think that's a great point for us to end on. So I thank you both again. And I invite listeners to come back next week to our next session where we will be moving into fixed income and starting to talk about bond markets, how they work, what they are. Fixed income is often considered the poor stepchild to the stock market. The stock market is where everybody puts their energy and attention and doesn't really think about the bond market very much. But I've come to learn it's actually pretty interesting and it's a great place to make impact. So I hope you'll join us next week to learn more about that, because I think you will find it really as interesting as I did as I started digging in to the bond market. So thank you again, both of you, very much for being here today.
Thank you for
Thanks
having me.
us, Jane.